All right, thanks everyone again. It's James Black, and we are here today with the CSE webinar presentation, a very special presentation by demand at the market financings. This is something we've had a lot of requests for to talk about, which is ATMs for short. And we've got the experts that you need to hear from today. We've got Ron Sedran, Managing Director, Equity Capital Markets at Canaccord Genuity, and he's being joined today by Chad Schneider, who's a partner at Blake's in Calgary. Gentlemen, thanks for joining us today and for sharing your knowledge. Really happy to have you. And without further ado, folks, I think we're going to run about half an hour or so presentation-wise, and then we'll open up the floor for questions. Like I treat these events as if they were real events and in a physical space, so more than welcome to ask questions at the end as soon as we get through the formal portion of this. But without further ado, Ron, Chad, maybe just tell us a quick couple of things about yourselves and what you're doing and how you're coping with the quarantine.
It's Ron Sedran here. I'll start. So yeah, Ron Sedran, MD at Canaccord Genuity. Been with the firm for over 40 years, or for over 20 years now. Really focused on the equity side, working with all our bankers in different sectors across the country. And it's really been over the last 4 or 5 years that I've spent a lot of time on these alternative equity solutions, ATM obviously being one of them, and the other one is the premium drip, which we created. Again, another cost-effective tool that clients can use to basically raise capital very efficiently and at a low cost.
Sure, and it's Chad Schneider from Blake's here in Calgary. Similarly, I've been with Blake's for over 20 years now. Practicing the securities, mainly with a focus on public M&A and securities work, help a variety of issuers and underwriters and agents on all sorts of issues, and had the pleasure to work quite a bit with Ron and his team on ATMs and premium drips and things over the last few years, and glad to have the opportunity to speak today.
Yeah, thanks, gentlemen. And I also want to thank Emily Jameson, who's with Ron's team, for putting everything together today with the slides and everything else. So thanks, Emily. I know you're listening. Without further ado, I will click over to the next slide, and we will get the show started. Just one moment here. Nope.
Sure. So it's Chad. So I think the way we'll do this is Ron and I will sort of jump back and forth through the slides and maybe interject here and there as needed. I'll start. So I thought this presentation was particularly timely, given the current situation we're all facing here, the need for liquidity and cash flow. The traditional equity markets, if they're not completely off limits, are definitely challenged, I think it's fair to say. And I think the ATM is quite an elegant and useful tool to raise some cash and equity in a pretty unobtrusive and effective way these days. And right now, I think makes it more attractive than ever. So what is an at-the-market offering, or as James mentioned, we call it an ATM. Well, what it really is it's a program that allows listed companies on a stock exchange to continually, periodically sell shares from their treasury into the secondary market over a stock exchange like the CSE through a broker like Canaccord at the prevailing market prices. So I think one of the best analogies I've heard is that it is much like a reverse normal course issuer bid, where instead of hitting the ask and picking away at the ask over the course of a day to buy back some of your stock in an issuer bid, here you're hitting the bids on the CSE with shares, issuers hitting those bids with shares that they're issuing from Treasury. The buyer on the other side of the deal doesn't know it's actually buying stock, generally speaking, from the issuer. It thinks it's just doing market purchases, but really they're buying it from an agent like Canaccord, who is receiving the money and paying it on to the issuer minus a small commission. That's sort of the simplest way of explaining these things. We'll talk about the detail quite a bit in a few minutes, but the basic structure of these things is they are done under a prospectus system. So much like any other sort of short form equity type of deal, you set up a base shelf prospectus that sort of provides the framework where you can draw down shares under that base shelf. Once that's up in place, you sign an equity distribution agreement, which is like an underwriting agreement, and alongside it a Prospectus Supplement that relates particularly to that ATM, I guess, deal that you're putting together. And you're sort of off to the races. Now, the one wrinkle that's sort of still in place in Canada that we'll talk about is because there's not a lot of law on ATMs in Canada under the securities laws, The programs are really governed by a set of exemptive relief orders from the Securities Commissions that take about a 4 or 5 week period to get to, and that's something that we're working on. That's sort of the final piece of the puzzle. And once you've got all that together, you file your documents on CDAR, you can start issuing shares to your agent during the life of the shelf or until you reach your limit that you set up under the program. So that said, there's sort of 2 key things to keep in mind in terms of current limits on ATM distributions that are in place for now. One is that each ATM program that an issuer sets up under a particular shelf, or so it's really, you know, the combination of the EDA or equity distribution agreement and the prospectus supplement for that package, is capped at 10% of that company's listed market value. And it's important to keep that in mind right now, because a lot of companies who have been using these often have sort of several classes of shares outstanding, whether they're founder shares or, you know, some sort of exchangeable shares for tax reasons, or there's large blocks of still held by management. It's really only the public float of the listed securities that can be used to calculate that 10%. So it's the class that's listed minus the 10% holders. So that is one thing to keep in mind. The other limit that's in place right now that we'll talk quite a bit about is, at present, a company is only allowed to issue 25% of its daily trading volume under an ATM in order to sort of moderate the trading, and that's something we'll talk about quite a bit right now. The nice thing about these ATMs, though, is once these are in place, you know, it's the issuer that really has full control of the program and the price and the volume. You can turn it on and off as you like. There's no obligation for you to actually execute these things. You can size it in terms of your current capital requirements and where your price is at, and if you like that. And, you know, you can, as I said, it's something when other traditional equity offerings might not be available. It's a nice tool in the toolbox to have. Because it's a prospectus offering, it's a little different than a private placement regime. You can really sell these shares over the stock exchange to any institutional or retail buyer that would otherwise be buying shares in the market. So again, as I said, keep in mind the buyer generally won't know that they're buying from the issuer. It's really like a secondary market trade for them. You'll see a couple points at the bottom of the slide that talk about the June 2017 Transcanada offering, and I won't get into detail on it, but the reason it's there is it was a bit of a game changer in Canada in terms of ATM offerings. Before that, they were pretty sporadic and pretty rare to see. They were still very prevalent in the US, but just really hadn't been used to much degree in Canada. Transcanada sort of opened the floodgates in June 2017 and used it as a pretty aggressive part of its capital raising program. And I think is, again, if you saw the recent announcement when they're going to launch Keystone XL, they mentioned in their news release that an ATM will be a key part of their funding platform for that. But what it did is it really brought ATMs to attention in Canada, and it changed the structure of them in Canada a little bit with a list of things there that we'll talk about later that now have become sort of normal course in Canada. So that's why I say it's a bit of a game changer and led to what I think is now sort of the second generation of ATMs that's in place and gradually moving towards the US model where these are a lot more popular. Not quite there yet, we're working on it, but we'll walk through some of that in a minute. With that, I'll sort of turn it over to Ron to talk about some actual market experience with the ATMs.
And Ron, sorry to cut you off there, Chad. I just unmuted you because there was some feedback happening when Chad was talking. So
no problem.
Yeah, go for it, Ron.
Yeah, so just on the next page, you'll see we highlighted really the U.S. market, which has really been the driver as far as the ATM product in Canada. And it was probably about 4 years ago that we started, talking to my partners in the U.S. and realizing that the ATM has really taken off. We originally, I'd probably go back in 2009 when we first saw a couple of the REITs and energy companies put in place an ATM, but it really never took off. And then again, 4 or 5 years ago, we saw the acceleration and growth in the US market that obviously allowed us to take a look at it from the Canadian side. And really in 2016 is when we saw two of the larger ATMs, one for B2 Gold for 100 million, and the other one was Parkland, both of them with a $100 million ATM, which we were the lead underwriter behind them. And it started to kind of become more socialized within the investment community. And again, as Chad alluded to, it was really the Transcanada Pipeline $1 billion ATM that really made it a lot more acceptable from the perspective of, when we went to pitch corporate clients, it was always a misunderstanding with the executive team and the board members, not really, having an understanding of what this ATM was. And I think the TRAP deal really opened the door to the market. And you can see on the bottom right, some of the recent financings that we've seen, Wheaton River and Franco in the mining sector, two quality companies that have put ATMs in place and have used it very, Wheaton just started, but Franco used it very effectively, and we've got a page at the back that will highlight. But again, it really just started 4 or 5 years ago in Canada. You can see the graph there with the US growth, and again, as Chad alluded to, we're really in the early stages in Canada as far as the adoption here. On the next page, we look at some of the advantages. Why should corporate issuers consider an ATM program? And here we highlight, really, it's all about flexibility and cost of capital. When you think of an ATM, really at the end of the day, and you look at a regular equity deal, today if a company were to raise capital, the street would probably charge you 4 to 5% in fees. And again, in today's environment, you're looking at 5 to over 10% discounts. Here with the ATM program, you're talking about an average of 2 to 3% all in. All in, that's including fees and discounts. So from a cost of capital perspective, it is extremely attractive from the issuer. And again, the flexibility, as Chad alluded to, the client decides when and if he wants to use it. And of course, it has the life of the shelf, so it's about 2 years. And the client can decide, again, when, what price, what percentage of daily volume they'd like to use. So it gives them that flexibility that a lot of our clients really, really like. Some of the other features, taking advantage of spikes in their daily volume, right? For some of our clients, liquidity for some of them is a little bit of an issue. They don't have, a lot of liquidity. But what's attractive about the program is you're able to take advantage of those days when you have a tremendous spike in volume. You've had a great announcement in one of your quarterly results, or a great announcement on an acquisition. This will allow you to tap into that market when you see a spike in price and a spike in liquidity. We also think it helps with short sellers, in the sense of companies that, short sellers think they need to raise equity. Having an ATM in place can combat that, in the sense of having to do a regular bought deal. The ATM gives you that flexibility in the sense of being able to tap the market if and when you choose. Obviously, with an ATM, it helps with liquidity. You're obviously issuing more treasury shares in the market and creating liquidity. One of the other features that our clients like is the reverse inquiries. For some of our clients, again, that don't have the liquidity, reverse inquiries are very attractive for them. And how that would work is, let's say company A announces an ATM program, an institutional buyer can reach out to the company or to the agent. Let's say they call up Canaccord and say, hey, I see B2 Gold put an ATM in place. I wouldn't mind taking $5 million at the market. So again, it allows institutions to now go directly to the client or the agent. I can give you the example of B2 Gold. We were the lead on that financing when they put in 100 ATM. I think we raised about 55 out of the 100. Most of that was raised through reverse inquiries. So institutions calling us and the client saying, I wouldn't mind taking down a block of stock. And the interesting feature with that program was the way we were be able to execute these larger blocks around this 25% daily liquidity rule that Chad alluded to, was the fact that they were cross-border listed and we were able to cross them in the US. And again, and that was a big reason why we at Canaccord have been speaking to the regulators. We've spoken to the TSX over the years to basically modify and make these changes that we think will be more competitive and actually keep us in line with what we're seeing in the US market. And I think Chad's going to talk about that a little bit later. And again, when we've used these programs, when we've executed these programs, the other feature that we kind of factor in is the fact that when we're executing these trades and we're dribbling shares in the market, our goal is not to put any downward pressure on the share price. So when we're executing these programs, our trades are 99% flat or upticks. I think that's really important, just from a communication perspective, and making sure that we have an efficient market, and we're not adding any pressure. If there's obviously some event in the day that could possibly put some downward pressure on the share price, we're making sure we're out of the market, or we're making sure that our trades are, as I said, either up or flat ticks. And again, another interesting feature of the program is it has been viewed favorably by the rating agencies. I know H&R put it in a few years back, and the rating agencies look at it very favorably from the perspective of balance sheet strength, having this alternative source of capital at their leisure. So I guess I'll pass it on. I think Chad, you're next here.
Sure. So this slide kind of walks through the mechanics and how to go about implementing it. And by and large, it's not that dissimilar from a typical equity offering under a Canadian prospectus filing, with a few things tacked onto it. The first thing, of course, you have to do is get in place a base shelf prospectus on record filed on CDAR. So as you would with any other base shelf filing, you first file a preliminary base shelf prospectus with the regulators. You go through comments with the regulators, and a week or 10 days later, you're able to finalize that. Your base shelf really, sets the maximum dollar amount of securities that you're going to sell over a period of time. And to be clear, you don't have to file an ATM specific base shelf prospectus. This can be effectively a vanilla shelf prospectus. If you've already got one up, chances are you can probably use that, as long as it's got the words "at the market offering" sprinkled in a couple places. So to be clear, this base shelf prospectus can be used for typical regular equity offerings, debt offerings, converts, anything you normally use a shelf for. So it's a nice thing to have in place anyway for a bunch of reasons, including while you have a shelf on file, it actually loosens some restrictions around pre-marketing prospectus offerings and equity offerings. You can go and talk to investors. So there are other advantages to having a shelf as well, even if you're not sure that you're going to use an ATM, but it's nice to get up there and ready. And I think maybe Ron, you can just comment. I think there used to be a perception that, hey, if a company's got a base shelf on file, that means an equity offering is coming and we're going to, short the stock and there's going to be market overhang. But I don't think that's really the case anymore. Is that fair, Ron?
Yeah, and it's interesting. That exactly was the case years ago. And let's be quite honest, there are a few clients of ours that still have this view. And again, our advice is, listen, if you don't have a shelf and you're the street's talking about you needing to raise equity, obviously if you file the shelf, there's going to be that anticipation that a deal's coming. So we are very, very focused on strategically when to file and when to file the ATM the supplement. And in our view, just like as Chad alluded to, filing a shelf was always, people felt that they're going to be doing a deal. Obviously that's changed. More and more clients have shelf prospectuses. We're talking to our bankers all the time. Any public company in Canada that needs capital should have a shelf. That's just a standard today, I think, in this industry. And what's going to happen is, just as that background to when the concern of filing a shelf in the past went away, we're going to see the same thing when the client files a supplement in ATM. We're going to see it's going to be perceived and received in the same manner where, oh, yeah, the client, like Trap, they just raised $1 billion. They're filing another ATM. No big deal. I know they've used it very effectively and efficiently, and it's not going to be a major issue from the street's perspective.
Sure. So that's step one, is get your shelf in place. Again, it can either be a shelf that you've already got up in place, most likely. It can be a shelf that you could use for a variety of reasons, or some issuers really just think, you know what, I really want to do an ATM, and that's the driver for driving a shelf. Either way, whatever the driver is, you get your shelf on file. The next step, that's currently a step that I alluded to that hopefully will go away in the very near future, is right now, as I said, the Canadian securities laws around at-the-market offerings are very short and very brief and effectively absent. So the whole sort of regime is governed by these exemptive relief orders from the Canadian securities regulators. There's some unique things about an ATM. For example, typically when you sell shares under prospectus, the company and the agent have to deliver the buyers a physical copy of the prospectus, or electronic copy. There's rights of withdrawal if the buyer wants to change their mind. If they don't deliver your prospectus, there's rights of action. None of that really is workable in the context of an at-the-market offering, where people are buying over a stock exchange, often not knowing that they're even buying under a prospectus. So you need some exemptive relief from those types of things. Even the wording in the prospectus certificate that's signed by the company and the agent has to change a little bit. So that's unfortunately a process that we have to go through right now. These orders are granted as a matter of routine, but unfortunately it's about a 4 to 5 week period that's sort of thrown in the middle of your process. So it's a bit of a gatekeeping item, but while you're waiting for that exemptive relief, you can keep working on other things, whether it's the shelf itself or the supplement going on. But hopefully some of the changes that I'm going to talk about shortly here that are forthcoming will do away with that and speed things up. So as you're waiting for your exemptive relief and your base shelf is up, the next two items, 3 and 4 there, the supplement and the equity distribution agreement, that's really the package that provides for your ATM offering. Just to speak about the equity distribution agreement first, it really is effectively the underwriting agreement or agency agreement that you would have in a typical equity deal between the company and the agent, such as Canaccord. And it's got your typical reps and warranties, indemnity termination provisions, the usual closing deliverables that when you sign the deal, the company has to deliver, legal opinions, auditor comfort letters, bring down certificates from the company's officers saying the reps and warranties are true, all that type of stuff. But does provide for this, it's sort of an agreement that in effect for the life of the program, which could be anywhere up to 25 months to govern the program. At the same time, you're working on the Prospectus Supplement, which is a very short document that sort of just builds on your base shelf prospectus. And all it does is really size the program for the ATM. So you'll say, look, we're going to issue $100 million Canadian. Based on that, we know we're subject to this 10% limit of our market cap at the end of the prior month. Other than that, the supplement really doesn't say much. It establishes the size of the program, talks about the EDA a little bit, and but that together with the EDA provide for the base of the program. The other thing that's going on during this time while you're doing those two documents is just like any other prospectus offering, because the underwriter or the agent, like Canaccord, is signing a certificate saying that the prospectus it constitutes full, plain, and true disclosure at all times during the ATM program. It's going to do some due diligence at the beginning of the program before it's launched, and then sort of periodically as the prospectus is alive and the program's alive and going and you're selling under it, everyone needs to make sure that, hey, whatever's in that prospectus, including the documents incorporated by reference, is full, plain, and true disclosure. So, items 3 and 4, the supplement and the EDA really are the package that say, we're launching the program now, and these two documents are basically going to be live for the next, up to 25 months or until we burn through the amount of equity we've reserved under this supplement for this ATM program. If you run out of, if you burn through that 10% limit that's in your supplement, you can launch another ATM supplement and EDA under the same base shelf as long as you've got room under your base shelf. So you can use it again, you just sort of have to go through the process one more time. One thing that's probably worth mentioning at this point is the issue of French translation. Now, as many of you know, typically in Canada, if you file a prospectus to sell securities in Quebec, both the prospectus and all the documents incorporated by reference would have to be translated into French. That itself was a little bit unclear for a few years with respect to ATMs, because as you're selling on a stock exchange, often not knowing who the buyer is, they could be resident anywhere in Canada. You didn't know where they were. So there was a conservative view that, and the Quebec Commission sort of flip-flopped a little bit on it as to whether you needed to translate or not. Fortunately, I think recently the trend seems to be more that they will grant, the Quebec Commission will grant issuers an exemption from having to translate both the base shelf and the supplement and all the documents incorporated by reference into French, which can be a huge cost saving and time saving for the issuer. That's not codified anywhere right now. You still need one-off exemptions from them, but lately that's been coming more regularly than not. So that's something that should be kept in mind and discussed up front with your legal counsel as you're entering into these as well. Once you've signed your package and press release that you're doing an ATM, you file these on CDAR, you issue a news release, and you can start selling under the program. And that's part 5, which is the execution of the sales. So as we mentioned earlier, the sales can only be made upon the direction of the issuer, and they will issue a notice to the agent like Canaccord saying, okay, we like where our price is now, we need a little bit of equity, go ahead and sell up to $10 million as long as the price is above this. And Canaccord will go off and execute those sales through its traders. And settlement will occur 2 days following the trail. So it's a pretty ongoing process and discussion between the issuer and the agent to settle those trades, because you can be doing it every day. And so you got to be on top of it, but it's the cash is steadily coming in the door during that process. The one thing to keep in mind, because it is a prospectus offering, is that an issuer cannot have material undisclosed, material non-public information in the process of an at-the-market offering. Because again, both the company and the agent are out there selling under the prospectus, saying that prospectus contains full, plain, and true disclosure of all material facts. So if you're in a corporate blackout where you think you've got some material quarterly or annual results coming out, and you normally wouldn't be in a position to do an equity offering, or you're negotiating a good M&A deal or a financing or another sort of financing, you probably got to turn the taps off for a while until that becomes announced and is publicly known. One nice little thing that came out of the Transcanada offering we mentioned earlier was this concept of a designated news release, where if material information pops up in between your quarterly results announcements, but isn't a material change, you file a material change report, how do you get that information that you might want a press release out there? How do you get that into your prospectus so you can keep selling without filing an amendment to a prospectus, which causes sort of a timely and costly process? What the Transcanada one first came up with and has become normal course going forward, and I think will become normal course as part of the law, is the issuer can simply issue a press release and at the top just say, this is a designated press release for the purposes of our base shelf prospectus. And that automatically gets built into your prospectus, so you can keep live in terms of selling under your ATM, because all that information is out in the market. And it provides a pretty seamless way to keep sales going. So that's one thing that's evolved and that's been very favorable. Finally, the last thing is disclosure. As this is going along, this is another area that's moved. Initially, the regulator said, look, we want you to file something on CR that says every month how much you've sold. Again, that's trended away from that, and most of the exemptive relief orders now, and hopefully the new legislation will provide that, look, as long as you include it in your quarterly reporting, let the world know how much you're selling, that should be enough. There may or may not be a liquidity test that goes along with it that says as long as you have certain liquidity in your stock, you only need to report it quarterly, and if you're less than that, it might be monthly. That's still up in the air. But that's sort of the regime as it stands now. So I can take more detailed questions on that in a minute. Maybe we'll just flip on to the next slide quickly, which is where we're going from here, which is some proposed amendments to this Canadian securities laws. Because I think the regulators are starting to get the message that, look, these are really good tools. They're really popular in the US. The stock exchanges, I think, like them because obviously they want people trading on their exchanges. They want to be competitive with US markets as well. So I think the regulators in Canada are looking to basically codify what's been in this exemptive relief for the last few years, beef up the securities laws under 44-102, which is what provides for these laws, and start moving at least as closely to the American practice as possible. We're not quite there yet, but maybe we'll get there. Below, we sort of highlighted what is proposed in these amendments. They were proposed about a year ago. Comments were due last September, and I'll speak to some of them. And my guess is we might have already seen something, but for this COVID outbreak, my guess is this may have come out to light, but I think everything's on pause for that time. But the things they're mainly looking at are, what do we do with this 25% sales cap? It's not present in the US. Do we really need to have this sort of limit on issuers who want to do Canadian ATMs, which sometimes is pushing issuers towards doing the US? And really, they've said there's three options. One is keep the 25% as is, which is sort of developed as the norm. Second is, well, unless you're a highly liquid security, you need a 25% cap. But if you're liquid enough, then we don't need it. And the third option is get rid of it altogether. We don't need it. We'll be just like the US. And look, there's no incentive. And sorry, a lot of the comment letters that came back for these proposals were universally in favor of saying, get rid of the 25%. It's not needed. Issuers have no incentive to do something that would, have so much trading as to negatively impact their sales price. Agents cannot manipulate sales prices, or they have governance on what they can do. We don't need this type of thing. So we'll see where that goes, but the feedback in favor of that was get rid of it. We don't need it. Similarly, the 10% cap on the program size, again, not there in the US. I think the feedback on that was also, look, same concept. This is a legitimate process. There's a prospectus. These are all on recognized stock exchanges. We don't need this sort of caps or limits on these types of programs. So we'll see what happens with that. I'll skip over a couple of these because they're not that material. Down to number 4, the cover requiring some certain disclosure on a base shelf prospectus. As I said earlier, right now you can basically use almost any type of base shelf prospectus. There is some movement for the regulators to say, look, these ATMs, we're still not entirely sure how they're going to work out. So we want in some bold language on the cover page, alerting investors and regulators to the fact that there could be an ATM under this base. And that just might drive some more questions about use of proceeds and dilution and risk factors, and bring that to people's attention. I'm not sure that's really going to fly or not, because I think most people understand that these are pretty safe and sensical programs. 6 and 7 are things I've already talked about in terms of the reporting and the designated news releases that are really part of the current regime, that are just going to be built into the rules, hopefully, once these get approved. Interestingly, what wasn't in the proposal, but may work their way in, was about the French translation I mentioned. A lot of commentators said, look, there's no need to deliver a prospectus under these rules to a buyer. Why do we need to French translate? We should just codify that, so that's certain, and save people a lot of money. So we'll see where that goes. And why do we even have this concept of prospectus liability whatsoever for these programs? Because the buyer really thinks they're buying on a stock exchange. So why do we need it? So those are some of the things that are flying around out there. But bottom line is, we're moving closer to the US. I think most people want to get almost all the way there, if not all the way there. But we'll see where the regulators land, hopefully in the next couple of months.
Ron, I've opened up your mic here if you want to.
Yeah, and just on the last page here, we added a page, a case study on Franco-Nevada, just to give you an example of a company that's put it in place and how it's worked. And obviously, one of the questions or concerns that a client might have is, how does my share price perform? And you can see, relatively, it followed the gold index. And we've done analysis on other ATMs, and really most of them have basically, we find it kind of neutral at the time of the announcement. And even if you look a month or 2 months later, we find very little downward pressure or share performance that's in a negative. And here for Franco, as an example, which, put in a couple $100 million, not only did they save $6 million in fees, but they also were able to beat the VWAP. So they actually executed it extremely efficiently and beat their average price for that month. So again, very effective use of the ATM program, well received from clients. And, this is one of the larger ones, but again, for our clients that we're talking about ATMs, there's a $200 million ATM, you can put a $10 million ATM. It doesn't matter. It really comes down to the size of the company and the use of the ATM program. And one other note that I'll mention on the 10% cap, if you're a $100 million market cap, you file 10%, which is 10 million, you've got a shelf for 50. The other feature about the program is, let's say you've raised that 10 million within the first couple of months, what you can do is just refile another 10 million ATM. So that's one way that we get around this 10% cap. So I just wanted to clarify for clients listening in. That's it for me.
Oh, look, there's the disclaimer.
There you go.
Leave that one up for a minute. Okay, gentlemen. So I got a couple of planted questions here. I'll throw your way, and then we'll get it to the questions in the chat. So if you have a question, you're more than welcome to put the chat question in. And if you want to verbally ask your question, I'll change the settings in a few seconds here, a few minutes, to allow you to unmute yourself and ask directly. But here's just a very general question, because I know we have a broad base of stakeholders. And I do know that at the CSE, we have everything from million market cap companies to almost, $500 million market cap or $1 billion. And, I guess just the general question is, are ATMs appropriate for all issuers? What's the audience for this, guys?
Yeah, I'll jump on that one. I mean, any company that, is growing, that requires capital and equity, I would think is a candidate. Obviously, companies that have been public for years and never issue equity, those wouldn't be top of mind as far as companies that would even consider an ATM. But if you're a growth story, you require capital, we just view this as an alternative source of low-cost capital. And again, I know Chad had talked about it doesn't matter the market environment that we're in. This allows you to access capital when the street is telling you, sorry, guys, nobody cares about your story. This gives you that alternative source. And we also have done some analysis in the US market, where we've seen issuers in a quarter not only execute an ATM, but also a bought deal or follow-on offering. So one does not cannibalize the other. It just gives you that extra source of low-cost capital. that, again, for a lot of our clients, they love that flexibility and diversity. And again, when companies are looking at balance sheets today, they're going to need all the different sources of capital at their disposal, and we view this as one of those.
Thanks, Ron. Got a few questions here, so I'm going to try to relate them to the ones we had already. But okay, here's one from I won't put your name out there. I'll just leave it anonymous. Hey, this seems like a great option, but what are the downsides, if any? There's always downsides. So let's just cut to the chase. What are the downsides, Ron?
Okay, so the downsides would be if, and I think it's one of the questions that we usually get, right? How do the institutions view the program, right? So that kind of leads into the question, what's the downside? The downside would be a company putting in place that the analysts in the street are talking about their balance sheet, the fact that they need to do something, they need to raise equity. So for that type of company to put an ATM in place, clearly it would be challenging for me to stay here and say, don't worry, everything's fine. Of course, in that environment, that situation, there will be downward pressure. So again, the downside is companies that the street recognizes needs to raise capital, they don't have access to the traditional means, and they put an ATM in place. So that would be a negative in the sense of what are the downside of an ATM program. And again, speaking to institutions, the way the institutions view ATMs is they're saying, listen, basically we think it's a great product. It just kind of depends on how it's being used and who's using it. So again, as I alluded to, company A puts it in place, good management team, good use of proceeds. You can see where they're going to need the capital to grow their business, no problem. Company B puts it in place, as I mentioned earlier, there's going to be a different view. And as long as it's used prudently, you don't have an issuer putting it in place that's hammering their share price every day and putting pressure on it. We think this product, again, the consensus amongst the institutions is, as long as it's used properly and as long as the right companies are putting it in place, it's viewed very positively. So the downside is, again, a company that's desperate and needs capital and puts one in place. That would be the biggest downside.
Yeah, you could get some predatory behavior perhaps, or just it's just not a good time.
Yeah.
Okay, now this is a good question. Can you do a cross-border ATM if the issuer only trades OTC in the US? So assuming a company's not listed on an exchange, can it do an ATM?
No. Chad, I'll say no right off. Chad, maybe you can give it more color.
Yeah, I mean, that's more a question for a U.S. lawyer on the U.S. side of things, but I would think that would be difficult. I think you need a functional exchange, at least in Canada, to do it.
That's my understanding.
Yeah.
Sounds
and in fact, the proposed rules in Canada, I think one of the bullet points was they were even going to limit it to make it clear that ATMs could only be conducted on, quote, ATM exchanges, including, the TSX, the CSE, Aquitas, and the Venture Exchange. They were going to wipe out any other market. So they're almost looking at tightening up versus what's the status quo. So I think it would be difficult to do it on an OTC.
So it'd have to be on a listed market. Okay.
Yeah.
Makes sense. And that leads me, I know there's other questions in the queue here, but there is a lead in here. Chad, where do you see the Canadian regulators going with the proposed amendments to make this a more attractive product for Canadian issuers? And I will note that we have, I believe, an observer from the BCSE on this webinar and a participant from the Alberta Securities Commission.
Yeah, no, appreciate the heads up. I mean, hard to predict, but I mean, when I say Canadian regulators, I also include the exchanges, and they're not really regulators. But look, I mean, given the economic environment right now, I think if anything, this is more impetus for the Canadian financial system to be as competitive as possible and provide whatever advantages it can to its listed issuers and public companies. So I would think there would be some motivation to try and align this as much as possible with U.S. practice where it makes sense, so that you're not chasing capital and activity south of the border, and keeping as much made in Canada as you can. That said, of course, there has to be responsible, and they have to look at the issues and make sure that they're comfortable with them. Based on the feedback that the comment letters from the various law firms, investment banks, investment dealer associations, industry associations, we're all strongly in favor of saying, look, we don't need the overarching limits on 25% a day and 10%. We got to let the markets work. We've got sophisticated parties. We've got good exchanges. all involved in this, take the handcuffs on that to some degree. So I think I think it will move as much to the US as they feel comfortable with, maybe not all the way there in terms of some things, but I think they realize that this is something that the Canadian market might really need over the next couple of years.
Cool. Ron, I had you on mute unless you want to weigh in on that.
No, that's good.
Okay. Here's a question I'll try to synthesize. So you sell the stock into the market. You said it's 2-day clearing. How soon does that money go back to the company? Because it's being issued from Treasury. How quickly does that money end up back in the pockets of the issuer?
It's like a trade, T+2.
Yep. So right away they have an account and boom, it's there. Okay.
Yep.
All right. Hopefully that answers that question. I like this one. Can an issuer use an ATM to do secondary offerings to reduce holdings from a major shareholder? So not just rather than Treasury issuances raising cash for the issuer. My apologies.
Ron, I'll take the first cut out from my point of view, and you can chime in. So, I mean, the rules in Canada anywhere are really written for issuers. They don't really talk about secondary offerings, but as far as I can see, there's no prohibition on it. My understanding is there haven't been any done in Canada, but they do them in the US. The one issue I think Ron and I have talked about this in the past before is if you've got a selling shareholder involved, that means that selling shareholder also has to sign a prospectus certificate and be comfortable in the diligence process, and that can last for months on an ongoing basis. So if you're an issuer, you've sort of got that selling shareholder in your kitchen, for lack of a better term, to use that prospectus to do that. That'll vary. The relationship between the selling shareholder and the issuer will vary in a bunch of different circumstances. So in many that'll be fine. In other cases that'll be not as desirable. So it was interesting. One of the commentators from a major bank in Canada that commented on this specifically addressed this point, and they didn't think there was a need. They thought the current system for selling, secondary offerings by selling shareholders was sufficient. But as I see it, there's nothing preventing it. It's just maybe a little bit more logistically difficult. Ron, I don't know if you had a view.
Yeah, no, I agree. And I also, we did look at this a while ago because I think it's a really good way for secondary shareholders to sell their stock in an efficient way. And again, a more cost-effective way. It's just that the technical logistics that Chad alluded to that we'd have to work around to see if there's a way to do this. So it's still out there. Right now we can't, but it definitely, if we had a client coming to us that wanted to pursue this, we would definitely explore a way to get around it.
Okay, that's good. Now, a follow-up question. Do ATMs usually have syndicates? So can you guys work with another brokerage house to facilitate this, Ron?
Yeah, I mean, that's a good question. And absolutely. We've executed ATMs as sole agent. We've executed with one other dealer, and we've seen, the Transcanada had 3. And in the US, on the larger REIT ATMs, you'll see syndicates of 7 to 8. So it does vary right across every sector.
Okay. Now, back to the construction of the ATM, the cost, and maybe Chad and Ron, you can both comment on this. You mentioned fees, but paperwork is not free unless you try to do it yourself, which usually means it's going to be done, in varying degrees of quality.
Yeah.
What is a basic budget program you should have? We often at the exchange say, you should have X amount for a prospectus or an RTO program or whatever, but an actual ATM program, what's your ballpark if you can provide one?
Yeah, I'm always hesitant to provide one because there's a few things that come into play, including, what is your base shelf? Have you done a bunch of reverse takeover acquisitions? Do you have a bunch of, multiple significant acquisitions? Those are all sorts of things that are going to make your base shelf prospectus, 170 pages instead of 30, for example. How many auditors are you going to have to involve? Hopefully you get this French translation issue sorted out. Do you always translate everything as a matter of course? Or do you not need to? Those are all sorts of things that you need to consider there. Have you done a bunch of transactions that require a lot of legal diligence? Is it in multiple jurisdictions? So it's hard to put a number on it, but I would say generally, I don't think it's really any more, frankly, it's probably less than any other sort of standard equity offering to just go from a standing start to doing a standard bought deal type of equity offering. I don't think it's much more. So.
Right. So not free, but not as much as you'd think.
Yeah. No, and you get 2 years worth of bang for it effectively.
Yep.
And as I said, you can use the shelf for a variety of other things. You might want it out there anyway. So.
Okay, that's good. And just a couple more questions here because we're getting up to the hour. But does the issuer have to have both a Canadian and a U.S. listing, or can it just be a Canadian listing? I'll answer that. And if I was listening correctly, you just need the Canadian listing to have a U.S. listing. Actually, if we're going to use the term listing, in its truest sense, would mean NASDAQ or NYSE, and no, that would basically throw a lot of people off this track. So you can correct me if I'm wrong, Chad, but just a Canadian listing is fine.
Yep.
And okay, here we go. How does the 10% of market cap restriction work? Is it 10% of the market cap as at the date the ATM offering starts?
It's actually based on your, I think it's closing price at the end of the month prior to the month in which you file the prospectus supplement. So you look at your last completed calendar month before you're about to file your supplement, and you base it off of that.
Okay, that's good to know.
Which has actually made a difference in the size of some programs, as stocks are, the volatility the last few months of some stocks going way up and way down in a period of a month has, we have timed programs based on which month was better, to either rush to get it in or delay to file the next month. So.
Okay, thanks for that. Just making sure I'm covering all these questions. Where can we find a list of ATM sales by issuer on a daily basis where they're required to report these sales? And can the shares be sold under anonymous? So, and then there's one about uptick and downtick. We'll leave that. So yeah, basically, if you're just watching the visible market, do you know if something's being bought or sold on an ATM program? Or sort of sold, I should say, sold.
Yeah, there's really no way of knowing, right? In the sense of once the client files that supplement, they've announced they're putting in place a $50 million ATM, and they just filed their shelf. The client's got 2 years, right? So you'll never really know when they're activating the program, and obviously that's one of the attractive features of the program, in the sense that I announced my supplement. I've got a $50 million ATM today. 2 months go by, I haven't used it, and I want to start trading it. You're not announcing to the street all of a sudden that I'm actually selling treasury shares in the market. So nobody can game the stock in any way, right? So, like I said, the client has that flexibility as far as when and if they use the program.
Right. Okay. And then let me see here. We got maybe a couple more questions. Well, here's going to be the second to last question, because we're getting close to time here. And I apologize if you had a verbal question. If you still want to get it into the chat, we may be able to squeeze it in. Why have we not, just general, why have we not seen many ATM programs filed in Canada? And I know you touched on it, but I just want to hear the answer one more time. I think it's illustrated.
Yeah,
where we need
and
to
that's a question that comes up a lot for clients, right? In the sense that, they'll say, Ron, this is really, really good. I love it. Like, what am I missing? Why have we not seen more Canadian companies? And the answer is, to me, is very simple. It always comes down to money. And the fact that the reality is the banks have not been pitching ATMs. And obviously, the obvious reason is, why would you want to give up that 4%, 5% fee when you're talking about cutting that in half, right? And then sometimes you have to even syndicate that. So the Canadian banks have been reluctant. That's just the fact. And the reality is that all changed when Transcanada put their $1 billion ATM in place with a U.S. firm, and the banks had to follow. And now we've seen Franco, we've seen Emera, Ford, and some other the larger utility and companies coming to market with these ATM programs. Now we're slowly starting to see the banks accept the reality that ATMs are here to stay. So to me, the biggest factor has been lack of banks behind the program over the years, and education, right? Corporate clients and board of directors not really understanding what the ATM is. And that's why 3 years ago, we actually had presentations like this with the TSX where we went across the country and had breakfast sessions. And that's why we've been talking to the buy side and legal firms just to socialize it within the capital markets. And again, fast forward today, we're seeing it much more acceptable in the market. We're seeing the buy side understand it more. And again, we anticipate that we will see more companies use the program. And again, once we see this market turn, look for the REITs, the Canadian REITs. Every single one of them should put one in place and will more than likely have one in place.
Okay. Yeah, and there's a question here. What is the appetite of broker dealers to take on ATM deals? Well, I mean, I think, Ron, you're illustrating that you guys are hungry for them, and we'll talk. You'll take, like I assume most bankers will. They'll talk to pretty much anyone just to see if there's a
Yep.
fit for your services, right? So.
Yep.
Okay, cool. I'm not seeing any more questions here. Did you guys have any last points you wanted to make before I do the wrap? I know that Emily wanted me to ask you what your favorite next Netflix show is. So and I'm actually going to, before you answer that, yeah.
Yeah, before I answer that, the only thing I'll say to corporate clients on the line listening, what's really important also is how it's communicated, right? And how it's press released. And that's something that we really focus on, right? The idea of just announcing an ATM in the middle of the market is not conducive to what we think as far as acceptance. And what we've seen and what we advise our clients, and I use Franco as an example, is, when they filed their $200 million ATM, they also announced a $300 million royalty deal in the US market. So, the one advice I'd say is if you're looking at putting it in place, we advise our clients to basically press release it with some other event, whether it's your quarterly results, whether it's some positive news, acquisition, any other news that you have going out there. We kind of advise our clients to package it with the ATM at the same time. And as far as my Netflix show, it would be Money Heist. There you go.
Money Heist. Okay, there's your selection. And I do have a couple more questions. How about we do that? So before Chad, maybe you can answer this one. Do they need to announce when it is completed, i.e. the full 10% done?
I don't think I've seen an announcement, but because I think over time it would just be either evident through your quarterly reporting that you've hit your 10%, or if you want to, as Ron said, you want to start over again, you file a new equity distribution agreement and supplement to launch a new 10% program. So, I think it would generally find its way probably into the MD&A saying, we're tapped out, we've raised this much, and just find its way in there, and they'll either restart it or wait for the next show.
Sorry, I didn't answer that question before as far as how does someone find out about if the client's using it. You would just search for the MD&A and, of the company on CEDAR. That's the way we would try.
Yeah.
All right, cool. That's great. And Chad, what's your Netflix selection?
Oof. That's these days that's like picking my favorite child, which by the way I can do now. I can do that now after 6 weeks of quarantine with my children. So
oh wow, the truth comes out.
Well, I don't know. I've chewed through Ozark and Narcos, but for things that aren't Mexican drug cartel related, probably I don't know if anyone's watched The Last Dance, the Michael Jordan 97-98 Chicago Bulls documentary. It's fascinating actually to see what makes these guys tick. So I'd recommend that one.
All right. Yeah, I've heard good things about that. So, okay. Well, without further ado, we're almost at the top of the hour that we set aside for this. If I left your question aside or I didn't get to it, these gentlemen are available. And you know what? Thank you so much for listening. This is a CSE presentation. This is a webinar. We get a clever name about being locked at home or stuck at home, and it's escaping me right now. So sorry, Mark Francis, I've screwed up. All locked down and nowhere to go. We are all locked down with nowhere to go. But I thank you, gentlemen. Thank you, Chad, Ron.
Thanks, James.
Emily, thanks for sharing your knowledge. I assume you guys are easy to get a hold of.
Yep.
And anyone here, if you have any questions, I'm going to just put up a real quick plug here for CSE. So in the Canadian Securities Exchange, we will be offering this content on our YouTube channel, CSE TV. I implore you, please, today, you didn't have to pay for this content, but you do need to go to our CSE TV channel on YouTube and subscribe. We want to give you more great content like that you're seeing here. We just recently interviewed Howie Mandel. We've got cannabis content coming up next week. Almost every day we've got new content coming out. So we want to stay connected during the quarantine. We want to stay connected after that. So webinars like this and great content with our issuers and thought leaders is what we're all about. So without further ado, gentlemen, thank you so much. Everyone, I'll see you subscribe online. And yeah, thank you so much. And good luck out there. Stay safe. And thanks again for watching.
Thank you.
All right.
Thank
All
you.
the best.